Hey guys, Mike here. So, oh boy, what a day in the market. We finally got NVIDIA earnings. Boy, what is a red day. They just sold us down like all day long. But now we have the earnings numbers, which I will show to you. The earnings call will be out in about 30, 45 minutes. So by the time this hits it, that earnings call will be over. But we get to see the reaction now. And I know you're going, but it must be horrible, the earnings, because it's going down. It's like, no, nothing to do with that. That's, we've seen this many times before. So this is about sitting there going, we ain't paying out those premiums. So if you're sitting in straight calls or straight puts, you bought them, that is, then, odds are when you wake up tomorrow, unless something crazy happens in the morning and maybe it just starts rattling like crazy and you're in calls, you're good. Or maybe it just drops in the morning, then maybe you'll be okay. But odds are you're probably going to get IB crushed. Not that I'm wishing it on you, but that's kind of how these things work, and that's how the market rolls. Also, we had one other stock, semiconductor come out. That thing got crushed today, down 25% at one time. You might have saw that. We'll also hit some other charts because the 200 moving average is coming into play a whole lot right now on some mega cap stocks. Okay, now when you look at this right here, you can see NVIDIA's quarter revenue. I mean, once again, man, they hang the moon. It is amazing to see this. I've never seen anything like it, so I'm kind of envious of it. When you see this, though, I mean, just look at the data center revenue. It's $4 billion added to every quarter consistently over the last 3 quarters. Again, total revenue, I mean, we go back and look and you can see it, right? Starting really in Q2, Q2 right there. I mean, 13 billion, 18 billion, 22 billion, 26 billion, 30 billion. And look at these margins. I put this in the Discord, and I like the visual of it here. Look at these margins, man. Oh my goodness. Gross profit margin, 75%. Operating, 62%. Net profit margins, 55%. Are you kidding me? And now they announced what? A $50 billion stock buyback program. And of course, the market must have loved it, but of course it didn't because, like we talked about yesterday, we either go in there or down to the shady area, depending on, how the market accepts the earnings, okay? Not what actual earnings are. And you can see, end up going down the shaded area. I don't know if you can see this wick, so I'm actually going to try to change this so you can see the wick, but it went right down to the shaded area, and it gave us our 9% drop. You can see that right there. And so it gave it the 9% because it was supposed to be 9 to 10% expected move, and that's basically what we got when we look at it. So then it started to bounce quite a bit. Again, never look at the initial move. We'll see what happens tomorrow. That's really the big thing to pay attention to, and over the next couple of days and weeks here, because obviously, like I said, seasonality wise, September is horrible for semiconductors and mostly the stock market in general. But this is NVIDIA. Again, the call is not out yet, so we'll have to see what they got to say on that. It just needs to get above that trend line right there, and that's really a big key right now when you're looking at this thing, and it can start to head back up. But again, the market's going to do what the market wants to do, right? And you always got to ask, well, is a lot of this priced in or not? And it could just be, a lot of people are more on the bullish side, and they're like, no. And so just stay focused tomorrow. If that ascending trend line, if it breaks above that, then we can start heading higher. But just see how the market wants to digest this tomorrow when everybody's in the playing field, not just the after hours crew. Now, you might have noticed Super Micro here come out. Remember, they had that short report put on about their bookkeeping, and boy, this is not what you want to see. They end up coming out delaying their 10K because they say, well, we need to take a look and, look at the internal controls over financial reporting. I'm like, that is not what you want to see, man. And I've told you guys about this volume gap. And if it broke that level, what was going to happen? And, that's when all the memes started coming out. As soon as it broke that level, got in that volume gap, it's like, oh my goodness, and that level was key, right? And so when you look at it, you can see gap down right there. And what really saved it was to the left, there is a weekly fair value gap right there. What normally happens in fair value gap, especially the large ones, you start getting reactions, right, to the upside. Starts moving back up and stuff like that. And plus, I mean, the thing was down 25%. There's something else, a couple of things that actually saved it too. And you'll notice there's a lot. I've noticed it after studying the charts on a lot of these stocks that get absolutely just destroyed like this, is the fact when you look at it, there's that volume gap. So you can see where real support is, right? I mean, you can clearly see where real support is. But again, we'll see what they're going to do with this one. This may take a minute to move back up. Who knows? This is one of those crazy type of stocks because they hadn't done their stock split yet. So remember, there's still only 50 million shares outstanding on this thing. And you can imagine how many shorts have piled into this, right? But what really got it was a couple of things. One, you're coming up on that 0.79 fib right there. That's always a banger for a bounce right there, which is what it got, right? But the other thing is just seeing how far down the stock is too. And I'm starting to notice this on a lot of these that get absolutely crushed, these low float stocks, is when they get down about 60 to 68%, man, it's like this magic number or something. And that is what happened today. It's clearly, it's down about, I think it got to 68% down, and it bounced. Does that mean it's the final bounce? Doesn't mean that at all, right? So it's definitely a damaged stock. We'll have to see what the management says. If there's any kind of credence to this short report, and they really do have some problems with bookkeeping. Now you see some of these other earnings right here real quick. You see a firm, boom, they announced like AI lending or something like that. These are regular hours, you can't see it, but it's just setting up here for this huge move, right? Shocker. Oh, look at that, and then it breaks out, right? You get the FU candle. So if you're in calls, loving life, even though again, this is another one, it had a huge expected move, so that's not quite the case there. When you go over to CrowdStrike again, this one right here, there's the FU candle right there, but this one's moving up as well. Very kind of soft on the guidance, but I believe it did beat top and bottom line right there. CRM's coming up into what would be resistance. Also, there's a gap to the left. It did fill the gap during this earnings right here as it popped. And so this is another one. They had a top and bottom line. I think that's actually, pretty good earnings. One thing you're starting to see on a lot of these stocks, though, is the guidance forward. Not the best, but there's top and bottom line beats, of course. And so those three right there, looking pretty darn good, I guess you could say. When you go over here to look at Palantir, somebody asked me about this. Again, we're in this channel, right? Channels matter. Third touch matters. Been selling off ever since. It did hold this support right here. And so you could see a bounce from here. All right, so if it can hold, if it breaks that support, does we roll back over, there is some liquidity down here. I would target probably between 28 and 29 right there, actually like 28.17 and 29.12 to see if it gets a bounce there, if it breaks this support level right here, if you're looking for more downside on this one. But again, let's just see how the market's going to digest. We've been in this selling mode over the last few days right now, and we've been breaking, not so much key levels, but a lot of moving averages are coming into play. Looking at shop right here, we talked about this one. As soon as it hit 0.79, there's that 200 moving average. We're selling down right towards it. That is going to be your key to watch right there. It's also the 0.65 Fibonacci level. And so, you get a bounce there. Obviously, you can move back up. Looking at that white line at the top right there, which would be the next resistance, like 78 if it gets past the 0.79 fib. Also, if you pull up the 200 weekly moving average, where I talked about this, if it gets through the next resistance level, around 79.30-ish, is where the 200 weekly moving average will be. But again, you have to start moving up again first. This was a crazy move up. We knew it's like a rubber band, right? You get crazy moves, it's going to spring right back down at some point in time. You just got to figure out where the bottom is on that one. And this one's going to basically move however the market wants to move, right? Now, Microsoft, and this is where some of these big stocks and why the Qs have been hurting here. You can see that trend line on the weekly. Makes sense, right? It hit it, rejected there. Again, it was support, now resistance. That's how these trend lines work. That's why you always keep them on your charts, no matter what you do, okay? Trend lines actually do matter. But when you go over here to the moving averages, you can see this one currently, I don't think it after hours it fell below the 200, but when it closed, it was right there on the 200 needing a bounce. It might have fallen below in after hours. I didn't check yet. But again, you have the 100 right above, which you rejected off of. That trend line is going to be resistance. The 50 is going to be resistance. So again, when your big boys aren't moving, the Qs and even the S&P, it lags, right? This is why the S&P has been stronger than the Qs lately, okay? Again, Amazon, it's below the 200. We talked about this wedge between the 50 and the 200. Just look for that. It hit the 200, broke the 200 today, and so it's sitting below that, okay? And so I'm going to go to the daily actually to look for this. But, next support really is that shaded area down there around like 166, 167. If it gets back above the 200, again, the 50 is in play, and that's what your aim is going to be, because that is right where the next resistance is going to be for this one, okay? That's where it topped out a minute ago. So, pay attention to that. But again, just another one that holds a lot of weight in the S&P and the Qs, okay? Now, looking at Tesla here, this one's been hot garbage over the last, probably, 3 days now? And when you look at it, this is another one sitting right there on its 200, and so it needs a bounce. It did not fall below the 200 in after hours as I was recording this. But again, if it does, you got the 100 below that. Up above, you got the 50, which now coincides with that descending trend line, which has been a beast to stay above right now. So basically, your wedge between 205 and 219. So if we can get some call action going, which you had none of that going for Tesla today, that is for sure. NVIDIA, none of it. And so this one needs the option market to get behind it. That's always when we have these big moves anyway. And so we'll see if it'll get a nice bounce off the 200. That's what we're waiting to see on this one, but just pay attention to those levels. Again, for the big move, you got to get above the 50 and that descending trend line. That's the only way you're going to get up there. That's why I showed you the volume profile where 235, you can get through that. Has that nice like volume gap going up 235. It just can't get up there and hold it. Now, looking at the index real quick, you can see the SPY or SP, whatever you want to call it, setting down below that trend line right there. And now it is resistance, was support. Again, another trend line to keep on your charts right there. When you look at QQQ, a little different though. This one is coming down into this box we had already mapped out probably a week ago. When you're in extended trading hours, it looks like a fair value gap. When you go to regular, it is a gap. Okay, and so it came down there during extended trading hours, popped back out of it, doesn't have to fill the whole thing. But again, this one's filling a gap to the downside. This is way behind the S&P as far as like moving up. It's nowhere near all-time highs like the S&P was. Okay, so now you're wedged between two gaps, right? Gap above, gap below. Again, doesn't have to fill all the way down. One thing very important to notice about the Qs though is when you pull up the moving average, here we go, it's below the 50. Okay, it was, you see where it's been testing it and it was bouncing. So now we get to see if do we get a rejection. Okay, and again, this is important because what I just show you on the other charts, they're either something below the 200 or right on the 200. So if they break those 200s, this is going to be a rejection on the 50, and we're heading down to fill that gap. That's your first level to look at. Somebody asked me about PDD. Again, I've never bought the stock, not in it. But you can see it's just a waterfall right now. It's a falling knife. Again, broke that one level of support. We're going to mark out another level of support. When you look at this, we'll even bring up the volume profile here. Just kind of check this one out real quick because I never use it on this one. But when we look at it and kind of scroll out, you know, big move up, obviously, but you can see right now, there's your support. So it's in there. Like it needs to bounce. I'm actually going to move this one actually down some right here. But if it breaks where it's at now, then you see that volume gap heading down the white line. Now, here's what people are hoping. A lot of volume coming in, a lot of call sweeps, a lot of put sweeps that were actually selling the puts, right? They weren't buying the puts. They were selling puts and then buying the calls. So sometimes that can signify where you're getting closer to a bottom. So just pay attention if you're in this thing or plan on getting in, okay? Now, more earnings tomorrow. We had a lot of retailers today, which I told the members about and stuff, and it was a very mixed bag. Some were good, some were bad. Again, you'll have Best Buy, Dollar General, American Eagle, Ollie's, Campbell's, Burlington, what was that, Birkenstock, and then you'll have Dell, Lululemon, Ulta, Marvel, Gap, Autodesk, MongoDB. Whew. And then when it comes to data, we will have data tomorrow that will actually absolutely move the market. Preliminary GDP quarter over quarter. Unemployment claims will come in. Preliminary GDP price index will come in. Pending home sales are going to happen. And so hopefully you guys got something out of that one. Please hit the like and subscribe button if you did. I really appreciate it. As a bunch of you have, feel free to sign up for the membership and stuff. The Discord was jumping today with a lot of conversation. So again, you get 2 private videos, Discord, and a morning news brief, which is filled with everything you can imagine underneath this sun. So hope you guys have a good one, and I will see you tomorrow.